Hi everyone, 90-second Monday market update today. It is all about the yields. I've been a little bit concerned. I've been updating our advanced mastermind clients on this all morning. I had to get it out as soon as possible because this move in essentially across the bond yield spectrum is going to throw major markets for a tantrum, as it so often does with so much uncertainty around inflation, when the Fed might pivot and all that, and a rate hike. What's happening today is a little bit scary because it can cause those punches, those flash crashes. So I'm just a bit on edge and I want everyone to be across it. Let's dive straight in. So this is what I'm looking at this morning. I saw the 10-year US yield absolutely just blitz through this previous resistance. There wasn't any resistance there. It just completely ripped right through, blitzed this morning, and it doesn't appear to be slowing down. This means that people are selling off US Treasury bonds. And it does indicate to me as well that we're very likely now going to get another rate hike in the next few weeks. So this is what the bonds selling off hard tells me. No one wants to own bonds. They think inflation is going to be here for a while longer. The Fed's going to keep raising interest rates. They're going to just park all their money in the reverse repo markets and what's it called, mutual markets and mutual funds and that type of thing. Diving into the words, but we're just looking here. The US 2 years screaming out of control. That's at 5.31%. Meanwhile, the 10 years at 4.41%. That is a yield curve inversion, and it's getting worse and worse and worse. This actually tells us that a recession is almost certainly coming, and it's going to be big, bad, and ugly. But with these yields going higher and higher and higher in the short term, it actually means that the Fed is likely going to try and tighten the monetary policy to get onto the inflation. But the recession is coming. It's coming harder than we think. So this is what I'm seeing. That's what I'm dialed in this morning. I'm also looking at gold. I'm looking at the dollar. Everything's kind of racing away. We're also seeing oils climb higher, as well as other commodities like uranium. This is the kind of thing that can cause that deflationary bust that we saw in COVID, maybe not to that extreme, but this is a serious situation. So I am watching Bitcoin right now because this is the sort of the gateway, the key to looking at liquidity and speculation, how markets are moving. And right now, Bitcoin is just starting to fold over, but it had a bullish engulfing weekly close. So you can hold your hats on that, but I would really say, watch your risk management techniques right now. Make sure that you are covering yourself because if the markets really start to move lower on the back of these yields, we could get some of those lower levels we've been thinking out for a while. Thanks for watching, guys. Thanks for tuning in. We'll catch you next time. Bye-bye.